my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about Labour. They've been in power over a week now. What's their impact going to be on interest rates? When they were going through the election processes, they promised to bring down interest rates. But can they do that? Or what could they possibly do in order to help interest rates come down faster and ease the pain for millions of people that have had increases in their mortgage, and also those that have had increases in their rent? Because when the mortgage rates go up, the rent invariably goes up as well. So we're going to talk about that and more in this video. Before we do, if you haven't done already, do subscribe to the channel over there and hit the bell notification. We've got new content every single day. Property news, investing news. I show you around my projects, which you can see my latest project from about a week ago. I'll be doing some update videos on that in the next week as well, once we start getting bathrooms and kitchens in. And while you're here, smash like, tickle like, do something to that like button, guys. That really helps me with the YouTube algorithm, I'll be honest. That's why I want you to do it. And it just gets more views on the channel. So I really appreciate everyone that does that. So, what is going on? Well, Labour has been in power a week. And they all of these parties, whoever you voted for, they had big, bold promises, didn't they? Labour said they were going to immediately get rid of Section 21, which allows for no-fault evictions. I've done a video this week on that. I don't think that that's going to happen as quickly as some might think, so do go and check out that. They also promised that they would bring down interest rates. But the problem is the government don't control interest rates. The Bank of England do, and they're separate, although some people think that pressure can come from government to drop rates, but it didn't happen, did it? So before the election, it could have they probably had, the Bank of England, a fair amount of pressure from the Conservatives to drop interest rates to help them get some positive news going into that election. And they didn't. The Bank of England just held interest rates, even when we hit that 2% inflation target. Now, for a while, we've been told by the Bank of England, when we get to 2% inflation, we will start cutting rates. We're there, but we still haven't got that. So what is going on with interest rates at the moment? Well, the average 5-year deal at the moment is over 5%. So that's the average. Now, on this channel, I do share the week's best interest rates, and there are deals less than that. There are deals at 4.4, but the average, the hundreds of different deals or thousands of different deals on the market, the average 5-year deal is now over 5%. The 2-year deals are even more expensive, and they're over 6% still on average. So you do need to go shopping around in order to get a good interest rate. Also, you need to have a bit of equity, and you need to make sure your credit rating is squeaky clean. So Labour, they promised to bring down rates. What can they do? Well, they do have the ability to bring some policies that could help with inflation. So later this year, we're expecting energy costs to go up. That's the prediction by the Bank of England, and that will feed into some more inflation. They feel from around October, inflation could start to go up again. Now, in other countries, the central governments, the governments have made sure that energy companies aren't profiteering off people's misery and difficult circumstances that we're in, and they put caps on energy cost increases. We don't seem to have done that. We definitely didn't do that under the Conservatives. Now, Labour do have one policy that they're going to bring a national energy company back into the UK. Now, that could drop prices, but it won't happen anytime soon. That will take years and years and years to get national energy up and running, and customers and you guys to have the ability to actually go with them at a preferred rate. That isn't something that's going to happen very, very quickly. So other policies that they could do, I feel, is to potentially reduce taxes on stuff. So we used to have it when I started work, 17.5% VAT for years, decades. It was 17.5%. Then we had, I think it was the 2008 crash or around then, when we dropped VAT to 15%. that meant cost of goods went down. And so that was an interesting thing. Now, you do have a risk there. There is a risk that people will start spending more and then prices could go up because of that. But at the moment, people are reining in their spending. And then we've got up to 20% VAT, which isn't going to help anybody. So that's potentially one thing that they could do. They could just go to the Bank of England and just say, we don't have any crazy policies. We're going to take things slow. The Bank of England wants to see predictability. This is what Liz Truss got massively wrong. So she had her mini budget. It was crazy. No one believed that the outcome that she predicted would happen. The markets panicked, and that led interest rates, mortgage rates, the rate that you and I get, to go up considerably. And that really was a bad time. Rates went above 7% on average, which was a crazy high period of time. And so because of that, Labour must instill into the Bank of England confidence in the economy. We've just had some good May data that we've seen some growth. The problem with that is that then the Bank of England will say, well, we've got fairly good jobs data. Jobs aren't going down too fast. The economy's doing fairly well. So maybe we can hang on to these higher rates for longer. And that, in my opinion, potentially could be a big mistake, because the impact of a rate cut is taking months before we really feel it and we get that in the data, because you might have just fixed for 5 years. So let's just say you fixed a 5-year deal right now. They cut rates next week. It's not going to impact your life at all. Like, you're still on your 5-year rate. And there are lots of people that are on rates that have still got some sort of fixed basis. And that means that they won't feel the impact of these. And this is what happened when the inflation started going up. The Bank of England took a long time to start raising interest rates. And there's a massive lag when you raise the interest rates again on the impact, and to slow down spending and to stop people putting prices up. It works the other way too. So if we don't cut and it takes too long to cut, we might make it restrictive too much for too long to people and potentially cause a pretty dramatic recession. So I don't feel that Labour can do a lot. I think that they can just give some policies out there that give certainty, that aren't too erratic. That's one thing. I think maybe you could cut VAT, but you've got to be careful that then people don't start going on a crazy spending spree, pushing prices up. That's a consideration. But the data does show we aren't spending as much at the moment on luxury items and stuff like that. We're only spending on what we need to spend on. So I don't think Labour has a massive impact on this. Let me know your thoughts. What policies do you feel that Labour could implement in order to get interest rates down faster like they want to? Comment below. Do smash like, do subscribe, do check out all the other content on the channel, including this video right here.